Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. SolarEdge is one of the best known solar companies and one of the most valuable today. So what do investors need to know about this company and the stock? That's what I want to dig into today. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube. And for more, then that's a valuable position to be. So this is really the core is power optimizers, then add in things like inverters, batteries, chargers, SolarEdge home water heaters, SolarEdge meters, lots of other ways the company is trying to grow and add more value to each solar installation. The way that SolarEdge's products get to market is they're actually working with third-party installers. So they're not actually installing any of these components themselves. They're more of an equipment company. And then there are over 50,000 installers that they work with, over 3 million residential sites, 125 countries. So there's a big distribution network. This is really just the product company, and then there's a software layer. But there's other people who are actually doing the work of installing these products. I'll mention too that commercial is a market that SolarEdge is trying to grow in. So a lot of the same products, power optimizers, EV chargers for carports, energy management system, data and analytics, and they're even trying to move into utility scale offerings. Now, utility scale solar is a little bit different than residential and even commercial, a lot more price pressure, a lot lower margins in general, but could be a really big revenue adder for a company like SolarEdge. Another nice visual here to show just how much growth has come from specifically the inverter market. You can see that power optimizers has been slow but steady growth. Inverters has really been a big growth market, particularly over the last year or so for SolarEdge. So expanding the number of products the company is selling. And the hope there is to diversify the revenue base. Revenue over the last 5 quarters, you can see slow but steady growth, and then margins getting a little bit better as well. GAAP gross margin of 31.8%, that's pretty solid for a company that's making electronics. Coming out of the pandemic, there's been a steady improvement in operating results too, especially on the bottom line. This is a non-GAAP number, pulls out one-time items. You can see that non-GAAP net income has more than doubled over the past year. On a GAAP basis, there were some one-time items here, even lost money, a little bit of money in the fourth quarter. But now these two numbers are starting to match a little bit more closely, which is what we'd like to see as investors. And there is some debt on the balance sheet as of the end of the first quarter, $633 million, but that's more than offset by cash of $1.65 billion and is actually less than the company's inventory. So debt isn't a huge problem, a lot of net cash on the balance sheet, and now positive cash flow coming from operations as of the last couple of quarters. The real challenge for SolarEdge is that we're starting to see growth slow a little bit from where it was a few years ago. There's now more competition with a company like Enphase in the market. And there's been talk for years that there's going to be suppliers from China and other lower cost countries that are going to come in and try to take some of the market share that both of those companies have in what's called module level power electronics. So that's the microinverter or the power optimizer that sits on the back of each solar panel. If that were to happen, we could see margins start to come down, maybe even revenue growth slow, but that hasn't been a huge problem yet. I think the real challenge will be once you get out of something like the power optimizer or inverter space and you get to battery storage, now there's a ton of competition. There's a ton of companies that are trying to be the brains of the home energy system, whether you're interacting with an electric vehicle or solar panels or just trying to have a smarter home. There's going to be a lot of competition in that space. We have not seen that have a huge impact on revenue growth or margins, but that's something that investors are starting to really think about. And that's one of the reasons SolarEdge's stock hasn't gone much of anywhere over the past year. And not to mention the stock is still not cheap. Price to sales ratio is over 4. Price to earnings multiple is about 73. But I did mention that there were some reasons that quarterly income was down in 2022. So that price to earnings multiple on a forward basis is probably a lot lower, but still not a cheap stock. Hopefully that gives you a little bit better context on what the company does, what you're paying for, what you're getting as an investor. And one of the reasons that I don't own it yet is I want that to be a cheaper stock. I don't want to pay for as much growth, particularly in a highly competitive industry like solar energy. But maybe you feel differently. I'd love to hear your comments in the comments section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.